is time for the word on Wall Street this morning. Top investors watching your money. Joining me right now is Comerica Wealth Management Chief Investment Officer John Lynch and Mahoney Asset Management CEO Ken Mahoney. Gentlemen, good to see you this morning. Thank you so much for being here. Ken, kicking things off with you with the reaction to these bank earnings. JP Morgan and Bank of America beat expectations this morning, both on earnings and on revenue. Wells Fargo beat on earnings per share but missed on revenue. The stocks are mixed this morning. You know, we really haven't had a guidance that leads us to believe things are going to turn around anytime soon. So we're still expecting a weak 2023, even if Jamie Dimon was a little more positive on the macro story than he has been in the past. But look at the stock today, down 3.5% this morning after the earnings. Your reaction?
Right. So year to date, it's interesting. Banks are outperforming the S&P 500, and since that October low, also banks are outperforming the S&P 500. It's interesting your interview with Jamie Dimon, because last year we were looking at an economic hurricane, and he downgraded that hurricane to probably more of a tropical depression, some rainstorms. But in doing so, though, they raised their cash reserve. You see that in these numbers. They've actually really increased it. The balance sheet looks great. But here's where the wet blanket comes in, I believe, Maria. We really don't like banks unless we see a very steep yield curve. We don't see a steep yield curve here, right? We see a flat yield curve, inverted at some parts. And their spreads narrow. I mean, if you pick through their earnings beat, a lot of it's because earnings to interest. Again, sometimes you say, gee, rates going up, and that doesn't help anybody. Well, it definitely helps the banks, and helped out JP Morgan specifically. Look, they're the best in breed of all the banks out there. They're the best managed that's out there. But it's nothing really exciting, as you said. It's really forward-looking. It's nothing really exciting here for investors to sink their teeth in. That's why you see it down a few points in pre-market trading.